In other company news, a 1% rise has been recorded in Aspen's first half-year results. The drugmaker has attributed this to lower net financing costs. Normalized earnings per share have also seen a slight uptick of 688.3 cents. Aspen Group Chief Financial Officer Sean Capazorio speaks to us now. Thank you so much for your time, Sean. Marginal gains, but it is a gain nonetheless. Talk us through the highlights in these results.
Yeah, I think it's been a really exciting half. We grew revenue 10% for the half, and very importantly, we increased operating cash flow per share by 44%. And as we all know, cash generation is the key to any value driver in the business. So we're very excited with our cash generation, our working capital investment, our revenue growth, and we're well poised to move forward into the second half.
Give us more details. Well poised, how is that envisaged in the current economic landscape?
Thank you for that. You would have noticed we've done some acquisitions in the first half, so these will come to fruition in the second half. We did an acquisition of a portfolio of products in Latin America, and those were on board for only 2 months of the first half, so therefore a full 6 months, and we're looking to drive strong growth out of that portfolio. And we've also recently taken on the Lilly business in South Africa and Sub-Saharan Africa, and that has been fully integrated into our Aspen business from January. So we should see some strong growth coming from the commercial pharma business in South Africa. And then on the manufacturing side, we've done a lot of hard work in investing in our sterile facilities, and now we are starting to see the payback coming in the second half. So we have guided the market that we will be generating strong, the start of strong profit growth in our manufacturing business in the second half, with further profit growth to come into FY25 and FY26. But a lot of hard work has been gone into that, and we're now at the point where we can proceed.
And that says a lot about diversification, especially after the period of COVID-19, where we saw that there was a significant drop in the demand with regards to pharmaceuticals across the globe. Tell us about the strategic decisions that have been made in this regard.
Yeah, I think the COVID vaccine era was an era where we, from an Aspen perspective, we produced, I think, over 225 million doses of vaccine for the continent. So we were really instrumental in giving patient access and saving lives. But very importantly, it also put us on the global stage to showcase our manufacturing ability and our ability to make quality, affordable products at the highest standards. And so that gave us the opportunity to attract these other opportunities of sterile manufacturing into both our South African facility and into our French facility in Notre Dame de Bondeville. So really exciting, and we're really looking forward to driving this forward. But certainly COVID was the opportunity for us to show what we're capable of doing, and we put our investment in place to take the business forward in the sterile space. So we're very happy with where we are strategically in sterile manufacture.
As we wrap up, is there points of further growth, given that the world economy is still limping from geopolitical matters and other risk factors that speak to elevated inflation and interest rates? How does Aspen fit into the growth trajectory there?
I think we're very well positioned. I think the second half of this year we're going to be growing much stronger than the first half. And going into FY25 and 26, the catalyst for our growth will be in the manufacturing segment, where we deliver on these sterile manufacturing contracts, and we're going to have the benefit of these new acquisitions for a full 12 months. So I think we're in for a nice period of growth, which we have guided to the market, and it's all now about execution. So we're really excited.
Thank you so much for your input. That is Sean Capazorio of Aspen talking to us about the pharmaceutical company's growth projections as well as anticipated performance.